Good evening. This is the Elliott wave update for the NASDAQ 100 for Wednesday, November 17th, 2021. Interesting day today, and that the market and the NASDAQ finally did break above that resistance at 16,336, which basically had been holding the market all through the Globex session and up until today's opening in the US. The market did break above it, and it looked as if we were finally going to start to break back above 16,400 and get up towards that goal, which is 16,448, before we do a little bit larger pullback and then finally do another push higher to finish the sequence, finish the minor wave 5, etc., and then put in those long-term advancing sequence, their highs. So let's take a quick review. As I left yesterday, I had counted out the within minor wave 5. I counted out minute 1, minute 2, and then I had left all this open as I was describing that I felt that the market was subdividing within minute 3 of this minor 5, and that does seem to be the case. So where we are within that is we have wave 1 of 3, wave 2 of 3, and then wave 3 of 3 subdivided into its own clean, nice 5-wave structure, ending at today's high at 16,396. That is the third. So it was the 3 of 3. Now we're doing a small 4 of 3. That can come back down to 16,270, which is the low from the previous fourth. And that is quite often the terminus or the endpoint for that. And it just so happens to match perfectly with the 50-day or the hourly 50 moving average. And then I would anticipate that if that holds and waffles around, that we should again turn higher, put in the fifth wave of wave 3, or the 5 of 3, and that I'm hoping is going to take us up to that 16,448.50, or possibly a little bit higher. And that will complete the minute third wave. Then we have another pullback and an additional 5th wave, which should then guarantee or not necessarily guarantee, so bad word, that should provide enough upward pressure to push to a new high, number 1, but above 16,548, and then start heading towards our additional resistance levels, and that being 16,608, 16,828. Now that might be a stretch. We actually don't have all that much left in terms of minor 5, but I continue to hold out potential, not necessarily probability at this stage, but potential for this minor 5th wave to push to its extreme, which would be 62% or 0.618% of that minor 3rd wave, which ended up here. And if that's the case, then we are definitely going to be breaking towards 17,000. Right now, I'd be pleased with 16,608 or 16,008. But there are several points in between, one being 16,050, 16,080, 70, and then 16,700. And then all the round numbers all the way up to 16,800. So there are going to be points within that. And this is still the reason why it's so dark, is because it's uncharted water. It's uncharted territory. Market's never been here before. We have no points that we can actually hang our hat on and say, well, this is a great support level, or this is a great resistance level. So right now we are relying on the Fibonacci relationships between the waves. And let me just see if I can get that open again. Good. We're looking at between the waves, where the 3rd wave, or this 5th wave that we'll be finishing to complete the 3rd, has a relationship to that 3rd. So this larger 3rd wave that is going on, it needs to finish, put in its 4, and then I can put what we would think or estimate to be the path of the minute 5th wave. So we still have some additional work here in terms of the market needs to trace out before I can add additional resistance levels above. Once this fourth wave, this small internal fourth wave, the 4 of 3 is complete, then I'll be able to connect the points to put in for where the 5 of 3 will likely complete in its most common points, and then the outliers that come above and below that level. So everything is kind of walking according to plan. This was not necessarily something that I was expecting to come in as heavy as it did, but it does still fit within the overall picture of what we're doing up here. The market continues to consolidate on one hand, continues to push higher on the other. And when you're putting the two together, it has a lot of mixed feelings in between, because I continue to say that as these buyers push up, once they are done, it's the same algorithm and the same operator that is like, oh, here's my scheduled sell orders, and boom. So that's how we get this type of two very bullish bars to be totally enveloped by the next bearish bar. So that type of activity, I believe, is going to continue, and people will get caught in it. And so, but we got to pay very close attention to the internals during the day. And that would be on the 1, the 5, 1, the 2, and the 5-minute chart are going to continue to point to what's going on and how it should be traded. And what I mean by that is that as it starts to break the moving averages on the way back down off of this type of a move, your moving averages will give you those clues right off the bat. The 4 did, then the 8 broke. And when it broke below the 20, it was like, get out of the way. And you can see that's exactly what happened. It was very strong selling. We had a little rift higher, and then they sold it off again. And that's when we got enough upside momentum to push through a lot of resistance and come back up. But then the Elliott takes over, and what ends up being, this small 5 waves down, it's now going to be corrected. So using good Fibonacci and Elliott, we could also figure out what's going to happen on the way up, where that should top out, and then we're looking for an additional decline. So again, A, B, we're looking for the C wave to finish. It may have right there. I can't say that it has or has not, but we're looking for the finish of this small 4th wave. If that completed the 3rd, now we're looking for the small 4th. So again, most common is that we look towards the price territory of the 4th wave of 1 lesser degree. That's right here. So, and that finished at 16,270. And as I just said, that also happens to be right where the 50-day, the hourly 50 moving average is located. So for tomorrow, I will hold to that. I believe that the market will be containing itself here. A break there doesn't necessarily upset the apple cart just yet, but it could. Again, here we have a market at 276. So even dropping down to 72, we're going to get a little bit of an overlap between wave 4 and wave 1. And that is not necessarily something that I want to look at. But I'm now just going to show a little bit better picture. But this still remains, but this now is at 16,284. That 50 still sits down there at 71, but now the high of wave 1 comes all the way down to 257. So I would, should this come down and look like it's crossing over wave 1, I will flip it to the line chart, because line chart just takes out the noise, the extremes, and the tails. And in that case, it does see, and without this tail, that's where the 4 ends. And so right now, we've already come down with the tail to that level. So if I took the tail out, likely the bar's not closed yet. So depending on where this bar closed, maybe that would be complete that little 4th wave. And we could start to rally again. Yet to be seen. But for tomorrow, We should hopefully start to pick up a little bit better volume than what we saw today, although the S&P did pick up in the afternoon, but the NASDAQ still less than 500,000 within the NASDAQ mini contract, and about 768,000 in the micro contract. So it's not horrible volume, but it tends to still be light, at least as this market was sailing higher. There was very light volume, and it picked up a lot of volume on that way back down. So I am going to finish up there. Continue to use the moving averages, trade smart, allow for a little bit of the craziness that comes in as we're working through these final advances and corrections to the upside. It is all part of the topping process. It's all part of the transitional process between bullish to bearish. And so we need to expect them and be able to trade either around them or with them. And that's where I'm going to leave her today. Our next update will be on Thursday, the 18th.